What's up, guys? Welcome back to another episode of Behind the Facade. I am your host, Gavin J. Gallagher, and on this podcast I explore the mental and emotional game often playing out subconsciously in your mind and the mind of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset, your behavior, to take control of your thoughts, your emotions, and most importantly, your ego. So here we are, guys, on episode number 55. Last week I was speaking with Galen Bales, and I hope you'll agree with me that that was a fascinating story, and the huge sort of value that was placed on his business before the crash. So really interesting. If you haven't listened to that, episode 54 with Galen Bales. This week, I'm going to be introducing my guest in a moment, but before I do, just wanted to give you a quick reminder that my YouTube channel is up there now, and I just want to give it a quick plug because as with all these things, it's all about growing the following and getting the videos watched and some engagement in the comments section. So if you follow the link in the description or in the show notes below, you will find it brings you straight to the channel and you can go and subscribe, and it would really help me out if you could do that because it's a bloody long process building a YouTube channel, I can tell you. And so just any help you can give me at all would be much appreciated. All right, so guys, today's guest is a person that I discovered after joining Clubhouse, which, by the way, appears to be going through a bit of a downfall, certainly in my own interest level, but I'm actually hearing that there's been a fairly big fall off in interest from other people. But anyway, look, that's another conversation for another day. My guest today is Mr. Dan Taylor, a Scottish businessman and property investor. And I wanted to bring Dan on today because he has a really unique approach to the traditional property investment. Insofar as he actually goes out looking for operating businesses to acquire. And most of the time, these businesses will have some sort of a property opportunity built into them. And the property will often be undervalued within that operating business. So it's an interesting way to go about it. And it does look to me to be more complex, but therein lies the opportunity, because at the end of the day, if it were easy, we'd all be out there doing it. Isn't that right? So I do think that this is a very interesting podcast today, because the conversation goes into how he structures it, how he goes into all of that. And another reason why I wanted to bring Dan on is because he demonstrates a level of resilience and positive attitude that he brings to a lot of what he does. And I really just respect that, because as you'll discover, he went through his own challenges with a huge payday a couple of years back expected, and he had worked on it for months and months and months. And just on the very, hour that they were supposed to sign this deal and it was all going ahead and he'd have a huge payday, and the banks pulled the plug at the very last minute and the whole deal fell down and collapsed. And rather than becoming kind of bitter and twisted, as some people do about that, Dan just rolled up his sleeves and got on with it and onto the next deal. And so I find it great attitude, and I think there is tons of value here today. So guys, get out your pens and pencils and your notebooks, and without further ado, this is my conversation with Mr. Dan Taylor. How are you doing, Dan? It's good to see you. Welcome to the podcast.
Yeah, I'm awesome. Thanks very much, Gav. It's an absolute pleasure to be here and commercial property, all things property mindset and strategies and that kind of thing.
Let's get going. And tell me this, where are you calling from? I see an office background there. It looks like it might be a home office.
Yeah, home office in Scotland, a little village called Kilmacombe. Grew up in Edinburgh, but we moved to the west, and we've been here 14 years and absolutely love it. A little village, 3,500 people, more sheep than people actually.
All right.
But it's kind of in the middle of nowhere, and it's really quite nice,
And I see a Turnberry t-shirt on there, so that looks to me like you're a golfer.
Absolutely, that's my home course, and I was playing there the day before yesterday, actually, first game of the season, and oh my goodness, the weather was absolutely incredible. It's beautiful.
Yeah, it's not so long ago there was snow and stuff like that, so it's nice to see a bit of a change.
Yeah, absolutely. We had snow in March, would you believe?
Well, Dan, we got a lot of things to cover today. I just, for the purpose of just familiarizing the audience with you, can you just sort of quickly describe who you are and what you do?
Who I am and what I do. Well, I suppose I'm an entrepreneur from the start, never had a job. And, I love, I suppose, acquisitions of businesses and commercial, predominantly commercial, I suppose. Why? Because it's simply the shortest route to cash flow and grow your wealth and really get your time back. Because that's the all important thing, isn't it? Your time, but then to be able to do whatever it is you want to do. And for me, it's more of the same. Deals kind of light me up. Deals and learning, really, kind of my two kind of main oxygen things. Love to constantly learn, and we help people as well trying to get into commercial property. But principally, what we help first is people who perhaps are business owners or they might be busy professionals and they don't have any time, and we help them kind of generate, kind of grow their retirement pots as well by investing in our deals. And that's my real focus going forward, to be honest, because it's the deals that kind of I love, and doing the deals and and helping other people grow their pots along that journey, along that way, is really what we're all about at Taylor Capital. Yeah.
Okay. So you originate deals for investors to put money into.
Well, we do the deals so they don't have to.
Right.
Think about this, it's like Netflix of investing.
Right.
They're on the couch, we're out there in the field doing the hard work.
Okay.
They're getting great returns. And along the way, we educate them and teach them about the strategies as well. It's almost like a throw-in bonus,
A bit of mentoring and stuff, yeah.
Yeah, we do that. So, and it's great fun, and we meet some great people along the way. I mean, it's been great. It's awesome, and we've got this club now, Private Investors Club, and that's what we want to grow. Do deals and grow that to fund the deals and help them grow could have a SaaS pension or whatever it may be, money idling away through erosion in a company, whatever it is. We help them get that to work, stop the erosion, number one, and start that income creation, and then the compounding thereafter, kind of thing.
Okay. Well, we'll get into the commercial side and I suppose that the impact COVID has had on it. But before we do, I just thought, can you take us back and paint us a picture? What's a young Dan Taylor? What would a young Dan Taylor look like? You grew up in Edinburgh, you said.
Yeah, I grew up in Edinburgh, and my first business, would you believe, is I should have a picture somewhere, but it was a 6 foot by 4 foot donut kiosk that we put at the west end of Princes Street, which is a great location, and it made a lot of cash, but effectively it was a job. And that was I suppose, my first real learning. Yes, we made money, making quite a lot of cash build up, but it was a job, and it was the kind of job where you could teach people to do it, but then obviously the margins would erode. So I learned about margins, I learned about getting people in, erodes that margin, but most importantly, I learned through that experience that try and create businesses where the income you create is not directly associated with the amount of hours that you work. And that was my first kind of key takeaway from that business, I suppose. And we sold it after that.
What age were you when you did this?
I can't remember, to be honest. I was young.
Was it like teenager kind of time frame, or were you a bit older?
Yeah, maybe a little bit older, maybe 21 or 2, or I'm not quite sure.
I get you.
Yeah, but then after that, I kind of went through this period of I suppose went through this period of massive learning. So we opened a restaurant, massive learning. Opened a clothes shop, massive learning.
I tell you, it's funny you say that, because when I hear the word massive learning, because I know the code that you're speaking, and it's you either win or you learn, and that's what you're saying, yeah.
Yes, absolutely. And it cost a few quid to learn these lessons, but my goodness, we learned a lot in a very short space of time. And ultimately, we then kind of went into the property side of things, and we did our first kind of, I suppose it's called a commercial to residential, conversion on a small scale in Gorgie Road in Edinburgh. And we did a few of them. I think that was late 80s or something. And then after that, our first pure commercial was 1995. And that was really the first time that, I suppose, yes, we made money before, but that was the first time where we made, a decent chunk. And we bought a little shop, tiny shop, 700 square feet.
Wow, that is small.
Yeah, and it was so anybody could have done this deal as a starter deal. It was £117,000. We spent about 30k stripping it all back to brick and started again. And 2 years later, we sold it for 750,000, which is quite nice.
750,000, wow.
Yeah, 750,000, and it was only 700 square feet. It was tiny.
Jeez.
And the real good experience of this one is we bought direct from the bank. I mean, I'm talking directly from the bank. Somebody did a moonlight flip. The previous owner, SS Scottish Power pulled the power, and so we found out, did a search, found out who owned it, went down to the bank. They were just in Edinburgh as well, Allied Irish Bank. Walked into the bank because I didn't know I could do that. Started talking to the manager and told them about the situation, about the property up the road. They've got the first standard security, and informed them their client had done a runner. Can we sit down and crack a deal? And that's how we did it. Simple as that. So sometimes ignorance in business is a wonderful thing, because if you don't know you can't do something, you usually just do it anyway. And that was another great lesson for me. And from that point on, we then, after we made that, I suppose, that capital event, which is a wonderful thing to do. Cash flow is great, but also coupled with cash flow, creating capital events in your life is a wonderful thing as well.
Put some folding stuff in your pocket, basically.
Yeah, absolutely. And from that point on, when we did that, we thought, well, imagine if we do this on a little bit bigger scale. And so from that point, we then started a kind of acquisition roll-up program, and it started in 97. And by 2005, we had kind of 252 staff and 30 shops up and down the UK. And we had an EBITDA run rate of 2.7 million, kind of going forward, which was really quite nice. And it was all great. But another lesson doing that is, sometimes when you put your ladder against the wall and you're climbing that little ladder of success kind of thing, and you get to the top and you look about and you think, how on earth did I end up here? 252 staff is not my idea of freedom.
Yeah, I can relate.
So I then thought, let's sell this, the whole business, and keep the properties and sell them. And there was one PLC in the industry, because this was the gaming industry, and the PLC, we wanted to sell the business, but obviously you can't just go to the PLC because they'll pull your trousers down. So we basically went to the market to sell this business, retain the property. So first of all, we did a sale leaseback of the properties, which is, for everyone watching, is simply just separating the properties from the business and having 20-year FRI leases in place. So we did that in preparation of selling, went to the market. Obviously the PLC was interested. We got to heads of terms with the PLC, and then 9 months of legals, we ended up with the completion day, which starts at 6 a.m. They've got 30 staff around our stores, and we've got obviously our own team around the stores. And they were obviously at the end of that day that starts at 6 and ends at 4:30. They were to pay us a chunk of cash. That then pays down the debt and the properties. Then we've got the properties going forward. Happy days, we're on the beach, yay! and this was the kind of I suppose the beach deal, the
vision.
Yeah, absolutely. And how do we get rid of all these staff that are causing issues every day, challenges, which were wonderful challenges, I suppose. And how do we replace that with non-hassle cash flow kind of income? So this was the kind of vision. After, I remember putting that ladder on the wall and climbing, not really liking where we kind of ended up kind of thing. And so on that completion date at 4:30, finally everything was signed. I can't get out of it. The PLC can't get out of it. And we're just waiting on one single A4 fax document, final grant of release of security, obviously from the bank, so that the business assets can go to the PLC. We get the money, happy days. And at 11:15 at night, we get the phone call from the bank, and the bank says we can't allow the deal to proceed.
No way.
I said, well, hold on. We've gone through 2 credit committees. We've got a 100 grand PwC report, which you wanted. We've done. They're signed up. We're signed up. It's done. What do you mean? And this is, we can't tell you why, but we can't allow the deal to proceed.
We can't tell you why.
Didn't tell us a thing.
That's crazy.
This was April 2009, so it's within the big financial crash, and in the bank we're doing. Obviously, RBS, Northern Rock, were backed up by the government, and this bank didn't want to be backed up by the government. So they were putting together a scheme, a plan, so they didn't have to partake of the government kind of bolstering up kind of thing. So there was this big macro thing going on that we didn't know about and wasn't aware of.
Political, yeah.
Yeah, and then they blew the whole deal up.
I don't believe you. Oh my God. That's a learning now. That is.
That was a learning. So they didn't only blow the deal up, they then forced us to sell each asset off at pence on the pound over the next 2.5 years.
No way.
Yeah. So we did 9 years of work to do this roll up, almost gone back to zero. So we went from zero to 21.4 million in 9 years. And then went from 21.4 million to 29.8 million with that sale and lease back in a day. So 9 years to 21.4 million. And then another day plus 2 valuation reports, we went to 21 to 29.8 million. So there's a lesson. Jesus. We spent 9 years getting to 21 and one day getting to
29.
via a commercial property strategy that's basically paperwork, sale and lease back. That was incredible. And it's all about cap rate arbitrage, basically.
Yeah.
Which was a wonderful thing and an incredible lesson to learn there. Another massive lesson is we went from there to 9 years, 0 to 30 in 9 years, back down to zero again, start again, effectively. Got humped by the bank, but that humping, that experience, that learning was invaluable because I entered that domain. I didn't even realize I was in their casino and how much control they have over your life.
Yeah.
So from that point forward, I thought, okay, amazing lesson. What can we take from this? What's the gift inside here? Because there's always a gift inside challenges. And I always like to look for those gifts. And the gift was, for me, I started asking myself different questions. And those questions were, okay, amazing. We've done all these acquisitions. Yes, we got humped by the bank, but now we've got all this experience. And how can we go forward and do deals where we're doubling or tripling the value of commercial properties? Not to re-gear, to de-gear. So we're completely risk-free. And how can we do it so we don't have, hundreds and hundreds of staff? And how can we do it so we don't have this CapEx need every 7 years to recapitalize the business kind of thing? And I kind of thought about this long and hard, well, not too long, but it's amazing. Now there's probably one of the biggest lessons of all. Asking yourself different questions, you get different answers, and you get the answers like that. It's incredible. Yeah. So started asking different questions, came up with this game plan. I need to triple values so that I've got 33% loan to value when I refinance. And I want to keep it there and then erode the debt. So I've got zero debt at some point. So that was the game plan. And off the bank, obviously weren't very nice to us. We bought one of the assets back, then we bought another asset back off them. And that's exactly what we did. We doubled and tripled the values by taking an operational business, which is valued on an EBITDA basis. So it's a multiple of operating profits or EBITDA. So that's how you value a business. And we transformed it into a blue chip investment, which is obviously valued on a cap rate investment, basis, which is a completely different kind of thing. And by turning operational businesses into investments with blue chip tenants, we basically doubled and tripled values of commercial property, and we never re-geared them. We just kept it there, and the debt gets paid down. So we're kind of at 15% gearing now on our family portfolio, which is quite nice. And it's all kind of like hassle-free income. So yes, there was work at the beginning, but after the work is done, it's kind of almost like set and forget. And what we're doing now, that's led on to, we did quite a few of those deals, and then it's led on to, I stopped doing deals at some point because I was waiting on their next recession, so being kind of almost like just paying off. I've been paying off debt over the last kind of, 10 years, or even in the last kind of 2-3 years, we've hardly done anything. We're just sitting and waiting because I knew it was coming. And now it's here. It's time to fill your buckets.
Yeah. That's what I was going to get to next. I mean, because that's a great story. And I mean, the learning involved in that kind of fall because of the banks. I mean, I went through something similar, as you know. But in terms of COVID now, where we are, I mean, commercial property, there's different views on where it's going. Obviously, retail has taken a dramatic beating over the last number of years anyway, because of, the way the internet is going and stuff. Offices are now seem to be in the crosshairs in a big way, although I do think that they will come back in some way, but it may be slightly changed and a kind of a different version of what we've been used to. But what's your take on this? I mean, has COVID damaged some of the asset, values that you that you're looking at out there at the moment?
Yes, absolutely. I mean, at the end of the day, COVID has been the black swan, that's kind of triggered the recession. The recession was coming, and it's now the biggest recession since 1706. If you go by Bank of England, GDP figures, which is quite an incredible stat, to be honest.
Yeah.
But so you've got the black swan event of COVID. You've got the kind of recession that's here. You've also got the retail or the digitization of the high street kind of thing. And then you've got this other thing, which is huge, called baby boomers. And all these things together is creating massive disruption. It's not just COVID. There's a number of different macroeconomic and demographic factors at play right now.
It's the perfect storm, basically.
It's the perfect start. This is the decade of deal doing. This will be known as the Roaring Twenties, the second Roaring Twenties, 100%. And if you can't make money in this decade, you really, the kids will be asking you in years to come,
did you make money in the Roaring Twenties?
Exactly.
And as long as we remember what happened at the end of the first Roaring Twenties, it was followed by a thing called the Great Depression, and we should all keep that in the back of our mind as well.
Yeah, absolutely. But yeah, things are changing, evolving. The massive evolution going on in the high street just now. Commercial property values are coming down. Not just coming down. There's that much fear about they're never going to come back. But certain high streets are always going to be there.
Well, that's true. I mean, that's what I'd like to kind of get into that with you. I mean, in terms of what you were out sort of looking at now, in terms of opportunities, what are you looking for? Like, what's the sweet spot that you think where you think there's opportunity?
Yeah, well, we're looking for we kind of help two different types of people. One are funds that own properties, and like imagine land securities and big pension funds. Through the pandemic, the last 6 months, they've been looking at their asset base and thinking, okay, this has been core for the last 20, 30 years. What's now core? Given the COVID's now here, there might be another COVID down the road. What's core? And they've been moving their focus to change their core profile to central London. I'm talking about big funds here. Central London, 2-3% yields, they're happy with that. And it's all about preservation of capital. They're not bothered about everything else. So land securities alone are putting 4 billion of assets over the next 5 years onto the market.
Wow.
Now that's incredible. So we're focusing on one of our clients, our customers, are big funds. And I'll tell you what we're going to be buying off and what we've already bought off them and continue going forward. And another one are baby boomers. So big funds, what do we want to buy? We're wanting to buy properties that are kind of over 15,000 square feet. So call it 20,000 square feet, and we want to take it to 25 plus, square feet. So if you imagine a typical 4-story building, that kind of thing, you got 2, 3, 4, 5 commercial tenants on the ground floor. And then you've got usually 3 stories of offices, that kind of thing. In very specific areas, we've targeted 26 towns. And we're going to be basically buying, these kind of properties are kind of 4 to 5 million to buy. And then a GDV, they're usually coming out at 11 million. So that's
through reworking them.
Yeah, and we're changing the upstairs into high value apartments, and then hopefully putting another 1 floor or 2 floors on top. One we've just gone on conditional on in Guildford in Surrey was kind of 7.6 million on the market, and then it went to 6.5. We went into heads of terms at 5.4, went to exchanged at 5, unconditional at 4.9.
Wow.
Now that's a journey. Just there's a whole journey and a learning how you do that kind of process and do it in a very professional way that they want to do business with you going forward, kind of thing.
Yeah.
This is not about just chipping. This is using professionals and your whole team around you.
Well, it's interesting you say that, because one of the things that I talk about is reputation and relationships being one of the key things that you need to maintain in this business. And what you've just said is really key there, because if you're going and meeting these guys and you're just seen as a guy who just chips away at the price, there's always this deal creep, and you're not a guy that's going to shake on a deal and that's the deal you're going to do. You're going to be a person who chips away, chip. But you've said that you do it in a way that they continue to want to do business with you. So you're able to rationalize why the price has to be kind of chipped down or whatever it is.
Absolutely. And it's always with a view of a long-term relationship. So we want to always do deals with people where they want to, because this fund that we're buying from just now, our commercial property solicitor that we've known for 20 years, his friend is the head of this fund, and they want to meet us because of the way we've conducted ourselves through the whole transaction. Now, that speaks volumes.
It does.
In terms of getting to the next deal, because we don't just want to buy one deal at a time. We want to, through a private investors club, raise a little acquisition fund and perhaps go for 2, 3, 4, 5 off of this big fund at once. And if you buy 2, 3, 4, 5, what are you doing? You're getting a wholesale discount.
Yeah.
It helps them, helps us, helps the investors. So it's kind of win-win. We always go for the holistic approach, of how does everybody win here? That's really our goal plan, always. Never to fall. Life's too short to fall out with someone.
Tell me this. I mean, what's your turnaround in terms of time frame for these kind of things? If you buy something, what do you typically have as your kind of exit point, or at the point in which your investors are satisfied that they've gotten the return that they went in for?
Yeah, well, the development side is 18 months to 24 months. That's kind of time frame there. On the other side of things, though, so that's the big fund. We're helping one customer. Customer number 2 are baby boomers. And what do we buy of baby boomers? Well, baby boomers that have a business, and that business is portfolios of commercial property. So we are doing marketing campaigns to them, and we're just about to offer on our first of portfolio. We've got all the information, viewed it on Friday. This is not your blue chips, but it's the whole portfolio is so under rented. It's incredible. So it's very much a buy the portfolio, sell off the, raising a little acquisition fund from the private investor club. They get first charge, they get a great return paid quarterly. We then, buy the portfolio, sell off the residential straight away, reduce, the debt. Then we do the asset management on each of the tenants, replace, there's currently 3.6 years unexpired, throughout the portfolio as a weighted average. We want to then replace every single tenant with a new, 10-year lease with a break at 5. Now, that's, most people will think you can't do that, but why can't you do it? It's back to that, if you don't know you can't do that, you then go and do it anyway.
Gotcha.
How we do it is we never ask for anything. We listen to the customer. And who's the customer? Your tenant. And we sit down and speak to them all individually and find out what's going on in their life. In that conversation, you'll find the goal, and you'll find their problems, their solutions. And if you can then provide a solution to that problem, whatever it is for them, which will be unique and individual, then that's how we get what we want, which is a longer term lease. Yeah.
Gotcha. Yeah. The key to it is always listening to the needs of the other side. Because only then when you know what they need, can you actually extract the points that they're looking for to actually be able to create a deal around that.
Absolutely. And for them, you're really talking about simple stuff. It could be, I've had, this sign we want, and you signed for years, and you just make a note of that. That we want I really fancy doing this, and this, because the businesses, they've got a lot of hairdressers in this portfolio. Maybe they need to add a beautician. Maybe they need to add something else. And you're just sitting down and listening to people and taking notes of everything that they want in their life. And if you can provide, the white, the knight in shining armor coming to the rescue to provide these things, and it could just be, I'd love to have 3 months rent free. We just got back open. That would be a thing of beauty, or 3 months half rent.
Yeah.
All these tools at your disposal, and our plan is to go get brand new 10-year leases, 5-year breaks, and increase the rent by 20% across the board, which will still be about 30% under the market. So we're not trying to get what the market is. We're just trying to get something fair and sustainable, because you got to think about your cash flow is determined by how successful their business is.
Yeah, of course.
And that 20% increase will probably be booked in over time. Yeah. But say it's booked in over 2 years, so 10% over 2 years, and then you've got the new level. Then if we are selling any of those units, then we'll basically all, that kind of discount that we're getting in the first 2 years, we'll just give cash to the person that's buying, to kind of top that up, kind of thing.
Gotcha.
So it's really buying a commercial property portfolios, do some simple asset management. When the long-term lease is in place, we're going to then offer them, firstly, to our private investors club. If they've got a SaaS pension, it could be perfect for them. So it's like this: buying commercial property portfolios wholesale, buying them at 10, 11%, doing the asset management, getting the rent up and selling them on an 8 cap. So it's buying at 11 cap, selling an 8 cap with a rent increase along the way by helping solve problems.
Yeah, it's a good model. I used to do something similar where I would actually buy at wholesale, we'll say, and then subdivide the unit into 4 or something like that, so that you're getting that arbitrage on the cap rate and on the rent.
Yeah,
interesting.
It's really simple and fast as well, because that could, this is in and out this year.
And tell me this, just in terms of, where the high street is gone and stuff like, are there any particular sectors that you're looking at that you're kind of excited about? I mean, obviously the pub sector and the restaurant sector has taken a massive hit in the last 12 months. And I wonder how many businesses will go under, or when they try to return, they'll have a hungry landlord there saying, well, you haven't paid us rent in, 6 months or 9 months. So it's time to pay. How many of them will decide to kind of go to the wall with the business and start with a brand new limited company or something like that? It seems to me that there's going to be some difficult decisions in the coming months when things start to reopen.
Yes, absolutely. I mean, one of the tenants in this portfolio is exactly what you're talking about, is a restaurant, and their company's dissolved through the pandemic, but they're just back open again. They're just about to start trading. And in that kind of thing, you got to, I see tenants as partners, and I help people through things the best I can. Now, if that means some kind of helping them through insolvency, which I know very, very well, how to restructure things to protect their, because what I do is I look at their business and I think, okay, if I'm in their shoes, and it's always good to walk steps in someone else's shoes. If I'm in their shoes, how can I help them protect themselves, and structure their business in the right manner that also helps me, but it helps them first. So you're thinking about them first always. And one tenant in particular, for example, we helped him set up a company that owned all his assets, and then he had a subsidiary trading company. And I said, make sure you keep it like that. And that for if you ever get, who would have thought that COVID? I mean, who'd have ever thought about that? He's basically, we've introduced him to an insolvency practitioner. He's got rid of that company, got another company there. But guess what? All the company with the lease, the assets, and all the
still there.
Still there, no problems at all. So yes, I like to help people, not just from point of view of what do you need, what's wrong, what's missing in your business, but how can we structure the business as well so it's safer going forward. And the reciprocity in that is incredible.
Yeah, it's true.
You really got to be thinking about them first, help them protect themselves, and then and therefore your cash flow is more stable going forward as well. But people remember, that they remember.
That you're decent. So it's funny you say that. I've got an example of that. My grandfather bought had some land. We're going back kind of 30, 40 years, whatever it is, and there was a builder who wanted to kind of buy the land, and he went along to my grandfather and sort of said, I'd like to build some houses and your land would be perfect for it. Could you do it for me? And he could have gotten this big price for the land, but he decided that he'd do a favor to this builder because they were in the same kind of space, building and all that. And anyway, fast forward 30 years, and my sister was buying a property up in the Dublin mountains where she now lives. And when she asked me to do the negotiation on the deal because I'm the property guy. So she said, will you deal with the agent and the buyers and all that kind of stuff? I said, yeah, sure, I'll do all that for you. And what actually happened was they were looking for this strong price, and but then I was sticking to my guns, saying we're not going above this. And then the agent came back. I said that, no, look, the deal is going to fall over if you look for any more. That's it. And then the agent came back and he says, the buyers want to know, or the sellers want to know, are you any relation to James Gallagher? And I said, yeah, that's my grandfather. And they said, okay, then they'll do the deal. Because they were the same builders that did the deal 30 years earlier. And
That's
they
incredible.
remembered they remembered that he had cut them in on a deal way back then. And so the reciprocity is there, they're,
That's amazing, isn't it?
yeah.
I always say, whatever you put out in life comes back to you tenfold. So put good shit out there.
Yeah, best advice in this podcast so far. Tell me this, Dan, is there any particular sector that you're sort of excited about in terms of prospects for post pandemic, like once we come back to it? Are there any areas that you're looking at investing in?
Yeah, well, the baby boomers commercial property portfolios is one. The other one are shops and uppers. Within an hour of train ride in central London, primarily over £500 a foot. We're looking for residential values, shops and uppers, 15,000-20,000 square feet and above.
So that's what you described before. That's where you buy the unit that's commercial on the ground floor, and then what was offices above is now ripe for turning into residential.
And the reason for that is, the PD, the Build program of Boris Johnson is the biggest deregulation of planning, since the war. It's just incredible what he's done. And the new thing coming out in the 1st of August, the Class E, is incredible as well. And the MA, permitted developments, basically the mother of all permitted developments, is great for. It's almost like we're getting back to back to capitalism. Let the market dictate what kind of use should be in that property. Yeah,
rather than local authorities making all these kind of decisions and stuff.
Let the real people in the street with money in their pocket dictate who's going to be in there. Because if they don't like who's in there, guess what? They won't spend their money in there, and they'll leave, and somebody else will come in. And that's exactly what Boris has done. He's deregulated the whole planning, and that's going to, start on the 1st of August this year. It's going to be phenomenal for anybody in England. Unfortunately, it's not in Scotland, unfortunately, but we're property entrepreneurs. It's a tiny little country. If you're in Scotland or wherever, you can still do deals in England, which is what we're doing. Most of our deals are England, to be honest.
Okay, interesting. Yeah, that was what I was going to ask. So you're not just focused on the Scottish market; you're actually looking specifically in the English market.
Yes, absolutely. I mean, we've had properties from the highest in the north, Dundee, to Margate before. That portfolio we talked about, the bank decided it was better in someone else's hands.
Yeah.
And now we've got properties in Scotland and in England as well. And that commercial property portfolio that we're, basically it's going to be under offer this week is in England as well.
Interesting. Yeah, very interesting.
One's very much a development strategy, 18 to 24 months, a lot of moving parts. You really got to know what you're doing. It's not for everybody. And the other one's really, I call the other one, it's like, it's coffees and chats as opposed to construction and contracts. It's just really, you're having chats with people, putting a new lease in place. There's a way and a skill to do it, obviously. How do you get them in the first place? How do you negotiate with the tenants and whatever? But the uplift, that we're going to increase the value by 50% on that.
Wow. Okay.
Before Christmas, quite easily. In fact, after we ditch the resi, it will double in value, which is quite incredible when we're not building anything.
Yeah. It's a real arbitrage. Yeah.
Yeah, there's a lot of different, and that's a 6-month thing, maybe 9 months. Let's call it 9 months. But it's really, there's so many different. I love commercial because it's such a creative space. That's what I love about it. I love the creativity of the space and what you can do, and really to force, capital appreciation and things. And the reason why I love forcing capital appreciation is you end up with I call them money boxes. You want to create money boxes, multiple diversified income streams, but you want to create safe money boxes.
Yeah.
That's why I love to force capital appreciation and come up with creative strategies of how to do that to make it safer. So for me, commercial is a hedge. It's how to hedge income streams.
It's funny I mean, I like the creative side of commercial as well, and I think it was our mutual friend Jerry Alexander who was saying that if you go and buy a residential property and you go and fill it with, gold sinks and everything like that, the
Yeah.
price of the property is not going to shift that much. I mean, but with commercial, you could tweak the lease, or you can do something with the, whatever it is that you can do, but you can literally double the value of that property in a short space of time. You'll never double the value of a residential property by tweaking it. I mean, you might increase the value by putting in a kitchen extension or something, but the street is worth what the street is worth.
Yeah.
And you can't make massive differences. Whereas with commercial, you actually can do that just by repositioning the asset or whatever it is.
Yeah, no, absolutely. It's phenomenal. I mean, one where it's more of a development, I suppose. It was a business that we bought. It was when we were buying businesses and turning businesses in decline into an investment. And this one was a kind of 3.5 story building, about 10,000 square feet or something. And I had a cafe in it, I had a gaming center, I had a pool, American pool, English pool, and snooker on the top floor. And
this was a business and these were what it was being used as.
So it was a trading business. It was two-piece staff, the whole 9 yards, and it was for sale on a business seller's website kind of thing. And it was offers over 340 or something. But you had a lot of people there kicking the tires. And this is again is about trying to find out the most important things to the vendor, to the person. And this took me 9 months to find the most important things to the vendor. And after finding that, the deal was really easy. And we paid him 150K, but it was a 5-year lease option, and it was we burdened the title with the option, so we could call, and it was heritable as well. So if anybody else bought in the meantime, the option was still there. But the key thing is we paid 150 when we took the option up, paid a net 120 because we did a management buyout at the same time. The manager, we helped him go from employee to entrepreneur, and he bought the business, which kind of is I don't know, that stuff kind of lights me up, and he's running a great business now.
So the benefits to him and the benefits to you, let's just sum them up. So he's gone from having a business, running a business that was part of the asset, that was using the asset, the property asset, and you paid him to get out of the asset, but to stay running the actual business. So
no, we had the vendor. We paid him. So
okay.
The vendor, we had a 5-year lease option on this one. We went in, fixed the business. After I fixed the business, made it profitable, which was pretty simple, to be honest, on this one. The manager that I've had for 13 years that I put in to help fix the business.
Okay.
I said to him, look, it's about time you took a step up and, you stop being an employee. You know what you're doing. You're running this place, and I'm just telling you what to do. Why don't you buy the business? And so he paid me 30K. I paid the owner 150 for the property, so a net cost of 120 for me. The rent's 24K, so it's kind of 20% yield. But it's only a short-term play, and that short-term play is coming to not an end as such, but there was always going to be a bigger development there because it's right next door to the university. It's right next door to the Students' Union. It's just a great location for student accommodation. And we've just had a pre-app approved for 70, it's a new build. So it's going to be demolished, new build 70 student studios. And why studios? Because of COVID.
Yeah.
Social distancing is kind of baked in from day one kind of thing. So not the HMO type offering. It's a complete and utter standalone version, almost like a boutique hotel, a student boutique hotel.
Yeah. So it's a deal of multiple phases, basically. Yeah.
Yeah. So it's going to go from a 120 to like almost 8 million GDV, that one.
Wow.
But the important thing is, what happens to the tenant, my manager for 13 years. We're along the process. We're taking care of him. We met him 2 weeks ago again, and then we looked at a property, helping him to get onto the next step of the run. What's the next step of the run? Why don't you just buy your own property next time? I'll help you all the way through it because his cafe part of the business is going great. He's doing deliveries, click and collect as well. It's going fantastic. I said, in fact, there was one right over the road. I said, I'll get a viewing with that and let's go and see it. I'll do the deal and I'll help you get into the property game, So it's helping people, putting a hand down and helping them on to the next step is really, it should be part of everybody's mandate,
Yeah, it's very rewarding.
Yeah, I love it. It's great. And to see somebody go through that metamorphosis employee psychology. Now he's a business owner, has been for years, and now he's thinking about becoming a commercial property owner.
An investor, yeah. So
Yeah.
yeah, he's going up through the steps. That's great. That's really interesting. In terms of good advice, best advice, what would you say is the best advice you've received over your career?
Best. There's been so many.
That's the thing. It's always a difficult question, but just which one would you say has had the greatest impact on your career?
I always thank Barclays for just being themselves.
The damage they did.
Giving me that great learning, because seriously, it's the best business gift I've ever had. But head and shoulders above everything else. After that, I would always say, the day it turned around for me, when I went from that period, remember we went to the donuts, then we had that period of failing or learning forward. And then we got into that commercial property and we did great. Then after that, I thought, maybe there's people out there that knows more than me, obviously. So would it not be wiser to go and try and find somebody and so I don't make all these mistakes I've made in the past? I shorten the curve, don't make the mistake, I get the result a lot quicker. So I started hunting for people in 1996 who
mentors.
Yeah, in 1996, I actively hunted for mentors. And the first one was a marketing chap that we paid £5,000 to way back in fact, it was 95. We paid him 5K and he was incredible. And that 5K allowed us the information from that 5K, from this marketing kind of genius, give us the tools to grow, that commercial property, the small one, 150K we paid for it. The reason we sold it for 750 was that £5,000 directly attributable to that. And then we hunted for somebody else. And in 1996, we paid somebody else £10,000. And after that £10,000, we then grew to 30 million.
Wow. So return on investment.
Incredible. And, I would always say, if you're younger, number one, just go and do it. But try and find somebody who's not only been where you want to go, but is still doing whatever it is to get them to where you want to go. Try and find someone and then try and add some value to his life, her life, and try and, hang around with 3 to 5 people that are kind of 2, 3, 4 steps ahead of you, because the learnings that you'll get from these kind of people are just invaluable. And for me, if you want to shortcut anything, if you want to collapse time, if you want to stop making mistakes, just find people who've already done it and then find a way of adding value to their life so they help you.
So they want you around, yeah.
Yeah, exactly. Nobody wants a vampire around that's just going to take. But try and think of a way how can you add value to their lives? Yeah.
Yeah. That's brilliant. We were talking about this before. I see a nice book there behind you, a bookshelf. And do you have any books or one particular book that you would recommend?
Well, I like that one thing, and I keep it there. So I keep reinforcing it in myself because I'm a kind of creator, and my biggest gift is creativity on deals. I seem to come up with creative solutions to problems. Also, my biggest downside is I'm a creator. I can't stop creating, so I'm always coming up with ideas and this, that, and the other. So that there is to remind me to stay focused because I've got the biggest opportunity of this decade, biggest opportunity of my life actually is this decade.
2020, yeah, the 2020s, yeah.
Yeah, and to stay focused on these 2 core strategies. So that's why it's there. So I love that book. And also the other one next to it, Barbarians at the Gate.
I love that book. I read that as well. All about the Nabisco tobacco company. Yeah,
absolutely incredible takeover. And the film about it is great as well.
Yeah, fantastic book. I'm just conscious of the time, Dan. Are we? I was going to say, normally I ask my guests the advice that you would give your 20-year-old self if you were starting out again.
Yeah, I think just what we talked about there. Really, if
find the mentor.
Yeah, find a mentor for sure. Not just a mentor, but people, maybe a little group of people that are already there and doing whatever it is you want to do. And if you're only 20, stop worrying, stop procrastinating. Just go and do it. If you fall down, you got plenty of time to get back up and do the thing again. And when you're 20, what have you got to lose? You don't have anything. So stop worrying about worrying about losing something, because there's nothing out to lose. So
you don't have all the additional baggage. I mean, I've been saying to people, when you're young, you can take these massive gambles, and if it fails, it fails. But you're not, in a situation like I am now with 5 children. You've got school fees, and you've got, all sorts of expenses that really you can't just sort of dust it off and say, oh, okay, they'll all do without food for the next couple of weeks. Obviously there gets to a point, but when you're in your 20s, you can do pretty much anything. And worst case scenario, you have to move back home with the folks for a couple of months. Do you know what I mean? It's
yeah, absolutely. I would definitely say that. Find out whatever it is. And another thing as well is, do something you actually enjoy, because you're going to be doing it for a long, long time. So if you're not into it, find something that you are into. Find something you actually love doing.
So find something that you would do for free is what I advise, because I find that there are tasks that are, you love doing what you're doing, but when the times get tough, when the market turns and every step is kind of a challenge, if you don't love what you're doing, you were just going to pack it in. Like, you're not going to stay focused on this thing through the mud. Whereas, when you're making money, of course, it's easy to kind of stay enthusiastic about it, but you won't get to that point through the kind of the growth phase you need, unless you enjoy it and unless you have a passion for it.
And I suppose another real important thing as well is, whatever the big plan is that you have to save the planet or do this, or your big mission in life, put that second. Sort your cash flow out first. Get to cash flow positive, what I call base count, which is all your monthly costs being met by an asset that's cash flowing, a money box, I call them. Get to cash flow, fix your family, then go and do that big thing. What did Elon, Musk do? PayPal sold it, made a ton of money, sorted everything out, and now he's away to, obviously,
Mars
and everything else.
On his way to Mars.
So do your version of that. Get cash flow sorted out, sort you out, sort your family out, and then go and do that thing, whatever that thing is.
Yeah. Brilliant advice. All right, Dan. People will want to reach out, perhaps. What's the best place to find you?
Yeah, well, if principally we love working with people in our private investors club. So if you've got money that's burning with inflation erosion or a SAS pension or something like that, then get in touch with us. If you want to learn more about commercial property as well, then we run our club. It's at taylorcapital.co.uk. Pop along there, and we do live broadcasts now and again. So if you go to taylorcapital.co.uk and register or log in or whatever, just put your email address in. You'll be notified when we do a live broadcast and what's coming up. Yep.
Sounds good. All right, Dan. It's been great chatting with you. Thanks so much for your time, and we'll catch you in the next one.
Yeah, Gavin, it's been an absolute pleasure. Thanks very much.
So that's it for episode 55 of Behind the Facade. I hope you enjoyed the podcast today. Thank you so much for listening. As always, my number one ask is to leave a review and or share out the episode with someone who you think would benefit it. Now, having said that, my new number one ask is to go straight to the YouTube channel and subscribe. But anyway, look, that's another conversation. In the show notes below, you will find links to the various things discussed today. I've put a link to Dan's business and a couple of things like that. So you'll maybe find those interesting. If you have any questions or topics that you'd like me to cover in future episodes, please feel free to connect with me directly through the Facebook group Behind the Facade Community. And alternative to that is my social media handle, which I'm sure a lot of you know now, is Gavin J. Gallagher. And lastly, to stay up to date with the various things I'm working on, you could please consider adding your name to my email list, which you will find over on the website www.gavinjgallagher.com/go. All right, folks, hope you have a great week. Let's talk to you again next week.